both interest and depreciation transfer to profit and loss account. Profit and loss account data to interest account to depreciation account. Real cash price 5 lakh, interest 1,12,500. Total amount payable installment is 6,12,500. Why balance brought down 75,000. Same 31st December 23 by interest. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Stage College, a Temple of Excellence, MYSURU. I am going to hand Financial Accounting 2, second semester, Unit 6, Session 2, in favor of Hire Purchase Accounting. So, I told you in the last session, what is Hire Purchase Accounting? It is a credit purchase. We have got two parties. One is called hire seller, another is called hire purchaser. Goods passes from seller to the buyer. Down payment is made by the purchaser, but he is going to pay the balance in number of installment. Each installment will be includes the interest till the last installment is paid. Hire seller is the legal owner, but the goods passer from seller to the buyer. Now, how you are going to pass the journal entries, I am going to say. In the books of hire purchaser, format, specific, date, particulars, ledger folio, debit, credit. The entry goes, number 1, asset account debtor, to hire seller account, first entry. So, purchase of asset and hire purchase system entry, asset account debtor to hire seller account. Second entry, hire seller account to bank account. This is the down payment. Then third entry, end of the year. These two entry at the beginning of the year. Now you have to pass the entry at the end of the year. Interest account debtor to hire seller account being interest. Then that installment, hire seller account debtor to bank account being first installment. The entries are asset account debtor to hire seller account being, this is asset purchase or hire purchase system. Hire seller account debtor to bank account being the down payment. First year interest interest account data to hire seller account data to bank account. This is the first installment. Number 5, depreciation account data to asset account being depreciation. Last entry, profit and loss account data to interest account to depreciation account. What are the entries are? Asset account data to hire seller account. This is at the time of purchase. Also down payment is made. Hire seller account data to bank account. At the end of the first year, interest goes. Interest account data to hire seller account. First installment, hire seller account data to bank account. Then regarding that depreciation on asset, depreciation account to asset account. Both interest and depreciation transfer to profit and loss account. Profit and loss account data to interest account to depreciation account. Second year starts from, this is first year. Second year, interest account data to hire seller account being interest. Second entry, hire seller account data to bank account. Interest account data to hire seller account data to bank account. This is second installment. Then depreciation of that year, depreciation account data to asset account first entry. This is profit and now second year starts here. Interest account data to hire seller account data to bank account, depreciation account data to asset account, profit and loss account data to interest account to depreciation account. Last entry, profit and loss account data to interest account to depreciation account. So it goes like this for all the years. So second year starts from interest account data to high seller account data to bank account, depreciation of that year, depreciation account data to asset account, profit and loss account data to interest account to depreciation transfer entry. It goes like this. We will move on to our problem now. Our problem goes like this. A firm purchased machinery for rupees 5 lakh on 1/1/2020. Down payment is 2 lakh. Balance will be paid in 4 installments equally with interest 15%. Depreciation on machinery at 10% on diminishing balance method. Past journal entry and ledger account in the books of hire purchaser. Now, you go to working note now. Particulars, rupees, principal money, then interest, installment. particular rupees, principal money, interest, installment. Total price 5 lakh minus down payment 2 lakh. Balance 3 lakh in 4 installments. This is your principal money. No interest for this. For sake of installment, it's 2 lakh. Now, what's the outstanding balance now? 3 lakh. 4 installment divided by 4, 3 lakh divided by 4, 75,000 per installment. Cash price plus interest 15%. First installment 75,000. So principal is 75,000. Interest at 15%, 45,000. Add the figure. 1 lakh. If you add 75,000 plus 45,000, 1,20,000. Now deduct 2,25,000. Balance. Principal remain constant, 75,000. Interest on 2,25,000. 2,25,000 into 15 divided by 100, 33,750. I will repeat, 2,25,000 followed by 30 into 15 divided by 100, 33,750. Add to 75,000, 1,08,750. Deduct minus second installment, 75,000. Deduct 1,50,000. Balance minus third installment, 75,000. 75,000. Interest on this 1,50,000. 150,123 into 15 divided by 100, 22,500 plus 75,000, 97,500. Deduct 75,000. Balance minus fourth installment, 75,000. 75,000. Interest on this 75,000 into 15 divided by 100, 11,250. Add plus 75, 86,250. So if you add the figure, 1,50,000, 1,50,000, 3 lakh plus 2 lakh is 5 lakh. Add this 45,000 plus 33,750 plus 22,500 plus 11,250, 1,12,500 add 2 lakh plus 1,20,000 plus 108,750 plus 97,500 plus 86,250, 6,12,500. Real cash price 5 lakh, interest 1,12,500. Total amount payable installment is 6,12,500. Extra how much? 1,12,500. We'll move on. Hire seller account. Entry. Date. What's the date of purchase? Hire seller account. 1/1/20. Machinery account data 5 lakh. Here 1/1/20. To bank account down payment 2 lakh. Then 31st December 20. To bank account first installment to bank. Then here 31st December 20. Interest of first year 45,000. By interest 45,000. To bank account, how much he pays? This is 1,20,000. Add, this is 5,45,000. 5,45,000. Deduct 5,45,000 minus 3 lakh 2,25,000. Same day. Balance first year over. Then 1/1/2021 by balance brought down 2,25,000. 31st December 21 by interest second year 33,750. 33,750 payment 31st December 21 to bank account. Second installment 108,750. $2,25,000 plus 33,750. 33,750 is equal to 2,25,000 plus 33,750 is equal to 2,58,750. 2,58,750 minus 108,750 750, 1,50,000. Same date. Balance carried down. Third year. 1,122. By balance brought down. 1,50,000. Same date. By interest. The interest of third year. Interest 22,500. How much they paid? 97,500. To bank 97,500. Add 500 to 1,72,500. 1,72,500. Out of that, 1,72,500 minus 97,500, 75,000. Same date. Balance carried down. 3 years over. Last year, 1,123. By balance brought down 75,000. Same. 31st December 23. By interest, fourth year interest. By 11,250. Add 250. This is 6. Yes. 86,250. 1. This is 23. To bank account. They are going to pay 86,250. So it will go like this. Interest to bank, interest to bank, interest to bank. Then we'll move on to machinery. Machinery account debtor to hire seller. What is the cost of the machinery? 5 lakh. What's the rate of depreciation on machinery? 10%. 31st December 20. By depreciation 10% of 5 lakh means 50,000. Same date. By balance carried down 4,50,000. 5 lakh. 5 lakh. First year over. Second year 1,121. To balance brought down 4,50,000. Depreciation on this 31st December 21. By depreciation 10%, 45,000. 4,50,000. 450 minus 45,000. 4,05,000. Same date. Balance carried down. Add 4,50,000. 4,50,000. Third year 1122, 2 balance brought down, it is 4,05,000. 10% on this, 40,500 by depreciation, 40,500 same date by balance carried down, 405 minus 40,500, 3,64,500, 4,05,000. Last year 4,05,000. Last year 1123 by balance brought down, 1123, 2 balance brought down, 3,64,500 by balance. This is by depreciation into 10 divided by 100, 36,450 minus 3,64,500 minus 36,450, 3,28,000, 3,64,500 minus 36,450, 3,28,050, 3,64,500. Goes on like this. 5 lakh by depreciation, balance brought down, by division, balance carried down, brought down by division, balance brought down, by depreciation, balance carried down. 3,28,000. Last time, interest account debtor to hire seller account, 31st December 20 to hire seller account, what is the interest of first year? Transfer to P&L account by profit and loss, $45,000. Second year, 31st December 21 to hire seller, what is the interest of second year? 33,750. Transfer to profit and loss account, 31st December 21 by profit and loss, $33,750. Third year, 31st December 22 to hire seller, third year interest, 22,500 transferred to P&L account 31st December 22 by profit and loss 22,500 then 31st December 23 to hire seller last year 11,250 31st December 23 by profit and loss 11,250 transfer it. So how it will goes? Interest to hire seller account by profit and loss account first year, interest to hire seller account by profit and loss account, interest to hire seller by P&L account, interest to hire seller by profit and loss account. Come back to depreciation on machinery 31st December 2020, depreciation on machinery first year. What is the depreciation on first year? 50,000 transferred to profit and loss. December 21 to machinery second year 45,000 by profit and loss account third year to machinery third year 40,500 first year 50 second year 45 third year 40,500 transfer entry last year 31st December 23 to machinery third year first year second year third year fourth year 36,450 36 transfer entry by profit and loss 36,450 so interest to hire seller by P&L account then to machinery by profit and loss account, to machinery by profit and loss account, to machinery by profit and loss account. Here, high seller account, machinery to high seller to bank account, by interest account, to bank account 75 plus 45, 1,20,000, by balance brought down by interest account, to bank account 75,000 plus interest. Next, by balance by interest to bank account. Last installment by balance by interest to bank account. Hope you understand. Very easy. You have to prepare 4 ledger. One is hire sell account, machinery account, interest account, and depreciation or transfer entries. So at the time entry, what's the entry? Asset account data to high seller account to bank account, interest to high seller account to bank account, depreciation account data to machinery account, then transfer entry, profit and loss account to interest account to depreciation. Second year start from interest account data to high seller account data to bank account, depreciation account data to machinery account, then transfer entry, profit and loss account data to interest account to depreciation account. Hope you understand. We'll have some problem in the next session with credit purchase method and accrual method. Till then, goodbye. Meet in the next class.